Hey everybody, Jeremy coming at you with the weekly market bias report for Sunday, June 11th, going into the trading week here. Futures market has just opened. Before we look at charts, just wanted to call your attention to forexfactory.com to show some of the important economic data that is going to be coming out. This week is going to be packed with high profile economic reports that you need to be aware of if you're trading this week. Monday, there is nothing, thankfully, gives us a day to come into the markets from the weekend, get our feet on the ground, set stops that we need to from any positions that we held over the weekend. Going into Tuesday, CPI data is going to be very important. Wednesday, PPI data, as well as the federal funds rate. It is currently expected by the market for a pause to happen, for rates not to actually get increased. If we get a surprise increase here that spooks the market a little bit, that might move the market. Other than that, they're not obviously going to cut rates, so it's either pause or increase. I am expecting them to pause. I don't see any reason for them to continue to increase right now, especially given the unemployment rate changes from last week. I think that really supports them pausing at 5.25. Core retail sales on Thursday morning, and then unemployment claims again Thursday morning as well. I don't expect the unemployment claims to really cause too much right now, other than just to give support to the pause for the federal fund rate on Wednesday. And then consumer sentiment is important, but not as important to the other ones on Friday. So kind of going into Friday, cooling off a little bit on the economic data. Going into our market bias report here, let's start out with the S&P 500. We have been talking about this. I'm actually looking at the S&P ETF right now. Usually I've been doing the futures charts, but decided this week to look at the actual ETFs instead. So for SPY, we've been tracking this breakout for quite a while. Friday last week, we poked our heads up significantly and tried to close above it, came right back down and closed right at that channel. So going intraday here, really my trigger is going to be anything above let's just say 430. So anything above 430 is going to be my trigger in on an intraday chart, as long as nothing crazy happens here. We do have really good support coming down to about 425.50. So looking at that out again on a daily, and then going out to 3-year. I mean, really, there's nothing to stop this from going up at least 10 to 15 points. I would say up to about 450, maybe even 460 for next targets for a swing trade. If you're day trading, obviously use day trading techniques for that. Going into the Qs, the NASDAQ here. Bouncing back to daily chart, this one has not broken out yet. Anything triggering above 357.66, basically the high here, I would say is your trigger in. I would like to see it close above that level instead of just an intraday break. If you do go intraday and look at it, if it does get back above this the high here and retraces back down into this range, I would probably have a decently tight stop here, because we are still fairly extended on the weekly chart. So any upward movement on the NASDAQ, I will want to see some kind of a tight stop there, and then let it reset and try again if it wants to, or let it pull back. A deeper retracement back down into the 20 rising moving average would be a bullish retracement that I might be interested in playing, depending on how that develops. Going into the IWM ETF, this is the Russell 2000. We've been pulling back after a really nice breakout here from around 180. We broke out from the 200 period moving average, as well as a really significant resistance zone here. Got a nice run higher, pulling back on the weekly, on the daily chart. I would love to see another day or two pulling back, coming into the rising 9, little snapback retracement, and then go. If we do get that pullback here, and then maybe a little doji candle sitting right on top of that 9 EMA, that would set us up to play a break of this diagonal resistance line. And if we go out to a weekly chart, you can see that is a long-term diagonal resistance line going all the way back to November of 2021. So I will be paying attention to that, and I will be looking for it to come back up to somewhere around like 195 to 200. So nice 10-point move or so there. And then finally going to Dow Jones. Nothing to see here. I mean, Dow Jones hasn't done anything wrong. We do have the diagonal resistance here. If we do get a break above that, we should see some price appreciation. However, we have so many little resistance lines baked in here that are right on top of us, and there's going to be a battle at every single one of those, or at least we can expect there to be a battle at every single one of those. So I am just not interested in playing the Dow Jones. The S&P 500 breakout and the triple Q, the NASDAQ breakouts look much, much cleaner to me. Going in, let's look at the dollar really quick. So the dollar has been on a tear and is sitting right at a breakout point. It did end up breaking down and closing below its 50-period weekly moving average, which I like. I would love to see this come back down a little bit. I don't know if we're going to get that or not, and this is going to be really what I am going to be looking for through all of these economic data points that we're going to get this week. This is going to impact what the dollar does quite drastically. So depending on what happens on those reports, we may or may not see a breakdown or breakout from the dollar, and that's going to heavily impact the markets one way or the other. If the dollar goes up, we should probably see the market itself retract. If instead it drops and breaks this support level and retraces down lower, that should give a boost to the marketplace. So I'm going to be watching the dollar pretty closely here. I'm actually going to set myself an alert for just under the 20-period moving average. If it breaks, let's say 28.40, that will give support to the bulls in the marketplace. Finally, as we wrap up, let's look at the gold charts. This is GDX, the gold miners ETF, which is a little bit more volatile and moves a little bit faster. Nothing really to see here. This is going to be heavily dependent on the US dollar as well. Honestly, at my base case, I am expecting this to come back down and retest our rising diagonal support line. And pretty much same thing for normal gold chart. This is GLD, excuse me, just the actual gold ETF, not the miners. And it's been struggling. It's been caught in this kind of range between, let's say 184 and change and down to 180, waiting for it to break one way or the other to tell us what it wants to do. If the dollar moves, we should expect gold to move as well. So I like where it is on the RSI chart. I love where it is with MACD starting to curl and show some support here. But it has some work to do, and it needs to break out of this range first. And then last but not least, going into silver. Silver got a nice little move last week. I don't necessarily see this continuing unless we see movement in the US dollar as well. So again, this week with all the economic data coming out, we are going to need to be tracking the US dollar really, really closely to decide what part of the market we want to play. Overall, I'm going to be focused on the S&P 500 and the NASDAQ, looking for specific companies within the NASDAQ and tech space that have had nice bullish retracements into support, giving me a signal, and then ready to rock and roll again. So that's kind of my game plan going into the week. Just to look at market internals before we wrap up, our market internals here, this is the AR high low 3-month chart, and we want to see multiple consecutive green bars closing above the 50 line to signal a little bit of bullish action. 2 consecutive closes below negative 50 would be bearish action. And you can see bulls are firmly in charge right now. So in terms of market internals, based on the AR high low, it looks like bulls have the nod. We should see that breakout in the S&P and the NASDAQ form sometime this week, most likely, especially with the catalysts that we have in news coming up. And finally, last but not least, in our advanced decliners, we did close the week in the negative there. This basically says that more stocks in the indexes were depreciating in value on the day than increasing. And that makes sense, honestly, because we were really overextended and we saw a pullback in a lot of the market. So that makes sense. It doesn't really concern me. I would like to see this pop into the positive somewhere around 500 or more going into the week. That would show that more stock charts in the marketplace are starting to move higher. And obviously that supports the major indexes that are comprised of all of those major stocks. So anyways, I'm going to keep it close and short here, guys. Enjoy that. Let me know if you have any questions, and I will be here to help you out. Talk to you soon. Bye.